Hey everyone, Eric here. Wanted to do a quick update on the small stacks portfolio. Made a trade earlier this week. I started building out my Excel tracker for it, which I'll share going forward. But for now, I just jotted it on the page here. So let's take a look. So still out right now with the 2 October 24 puts. I traded those for 50 cents. They're essentially trading at value right now with XLF kind of still drifting sideways. I am happy to see price above the 200-day moving average. Now, I do want to see the 50 cross above that, but that's just, a longer term thing right now. There's nothing to be done in the trade. Just leave it on. We're still 28 days to expiration. Next up is Zynga. So in there, I sold the 9 October 8.5 put. So let's take a look at Zynga right now. They're trading at 875. I'm still down here, so I'm comfortable with where I'm at. This is a trade that I will roll if I need to, but still plenty of time left on the table. So again, another trade that I don't really need to make an adjustment in it, and I do not intend to. Now, the one that I did make a couple trades in is Kroger. So in here, I established a leap diagonal earlier this week, and it's because I like the product in general, and I thought that it offered some good exposure and a great return on capital. So I ended up buying one of the 16 April 29 calls at $8.42, and I sold one of the 11 September 37 calls at $1.06. Now, I always talk about wanting to sell at a ratio if I can, but it's a smaller account. So in this scenario, I wasn't able to sell at a ratio, which is completely okay. I still structure the trade mining my deltas so that I do not have upside risk. That remains to be super important to me. So actually today I ended up taking the trade down. So I closed out those 37 calls. I paid 42 cents for it. So I realized a profit of 64 bucks. And then I laid out the 25 September 36 and a half calls and I collected $1.16. So that will take me through earnings unless I could take it off before earnings, which if I can, I will take it again, probably a little more, 55, 60% profit and then see what else is out there. So for current portfolio stats, I'm still considering it 5,000, whereas technically it is 5,064, including that recent gain. But I'll start to calculate that probably on a monthly aggregate basis. The allocation currently is $4,092, so that's about 82% utilized. Realized P&L is 64 bucks, which is a 1.3% return on the portfolio. That was in 3 days, so obviously happy with that return. And then the credit outstanding is 193 bucks. That represents 3.9% of the portfolio. Now, one adjustment I do intend to make going forward is if I can close out of XLF for a profit instead of taking assignment on it, which includes, rolling, I likely will take that down and put on another leap in favor of it. And the reason for that is the $50 is fine, but I don't want to tie up the $2,400 in the trade. I laid it out there because it's a sector ETF. I'm okay with the risk. And if I end up taking ownership of it, I'm fine with it. But I would prefer to get into a leap instead so that I can kind of enjoy some of the increased volatility we're seeing and pretty much increase the efficiency of the account because the Kroger Leap Diagonal right now is absolutely outperforming everything. It's, over a 12% return on invested capital, whereas, XLF and Zynga both are a bit lower than that. But I will definitely make sure I maintain at least one coverage strangle in the account. And once I can take Zynga down, I will still look for some sort of sector ETF in general. I am convicted in that simply because I want the reduction in unsystemic risk. So then once that's set up, I will probably maintain that one core holding in some sort of index ETF or sector ETF. And then I am looking to have on probably two leaps at the same time, making sure I leave room to scale in. So for Kroger, I allocated $1,500 to that trade. And right now we're using 842 of those dollars, which I'm completely okay with. That is a very reasonable return. So fine with that. However, that's really the beauty of leaps is to be able to efficiently get a decent return on your capital. And once I can scale into these positions, I will make sure I continue to sell at a ratio so that I also do not cap my upside. So I wanted to walk through another diagonal that I'm eyeing for the small stacks portfolio, and that is Pfizer PFE. So what I'm eyeing in here is something out in 16 July 21, probably the 28 calls. Those are trading at around $9, and it's a 83 delta, and then I would sell to October 36 and a half call against it. So the reason why I like this trade, one, I like Pfizer a lot where it is. I also think that it's a very solid return on invested capital. It's a $900 trade to open up, and I would collect 128 on the short call. So it's a 14% return on invested capital over the course of 28 days if I hold to expiration. Now, part of that is because there is earnings coming up the 27th of next month, which is totally fine, not worried about that. And the thing with Pfizer that I enjoy, obviously, is they're working on their COVID cure. So I like the involvement there. I would like to see it come down just a little bit more, which may adjust the trade a bit. But I am going to target an entry between um, 35 and 36, somewhere in there. So I'm kind of holding off, waiting for that. Now, if I do see a good trade in there, I will take it even before I have the trades in XLF off. And the reason why I'm doing that is because I have room in the portfolio. Yes, I will be near max allocated and it will reduce my position in Kroger, my max position in Kroger. But that's, again, one of the trifles with smaller portfolios is working through those decisions. So this is where we're at currently. Obviously, I'll take a look at the Pfizer trade, see if that materializes for me. As always, if anybody has any questions or any comments that they want to work through, feel free to let me know, and I will catch you all later.